This is a quick lesson. Here I'll show you how to prepare inventory account. Okay, this is a traditional T account ledger. Here we have three columns: date, detail, and dollar. We could add one more column for folio. So same we have date, detail, and dollar columns on the credit side. Okay, often we see inventory account on the questions, but many of you make mistake. So you requested to make a video on this topic. So here we have a question taken from IGCSE accounting past paper. Before we write up here, let us see the question. Logan is a trader who sells goods on credit. His year end is 30th September. Logan has provided the following information. So here we see at 1st October 2022. So here we have inventory, trade receivables, other receivables. Okay, then here for the year ended 31st September 2023, we have some more information. Then we have here inventory again. It is 8,675. Okay, so here we have on the question two values for inventory. So only these two values we'll take here in this inventory account. Okay, first one is given for the year October 2022 and another one is 30 September 2023. So one is opening inventory, one is closing inventory. Okay, so how we take these inventories in the inventory account? Okay, so where does opening inventory go? We take it in the income statement. Yeah, the first section of income statement. So we add opening inventory, yeah, in the cost of sales. Okay, so we have opening inventory. It is first of all the opening balance. Okay, for this inventory. So opening balance inventory is an asset. Inventory is an asset account. So asset account is a normal debit account. Okay, it has a normal debit balance. So we will record on the debit side as a balance PD. Okay, so here on the question we have date 2022 October 1st. So we will write balance BD stands for brought down. Okay, so here on the question again we see at 1st October 2022. Okay, so here inventory it is $8,400. Okay, so this is the opening inventory because this amount is given on the first day of the financial period. So here it is $8,400. We will write on the dollar column. Okay, now this amount will be taken to the income statement at the end of the financial period when business prepares it. Okay, so when business take it, this opening inventory to the income statement, what entries to be made? So here we write income statement account to be debited and inventory account to be credited. Yeah, so once again income statement to be debited, okay, and opening inventory to be credited. So here inventory is credited, we will go to the credit side. Okay, and we will write the opposite account, okay, which is income statement. So let us write here income statement on the detail column. Okay, it is same amount $8,400. And when we prepare income statement at the end of the financial period, yeah, so here accounting period started on 1st October, it will be ended at 30 September 2023. So let us write here date 2023 September 30. Okay, so for the opening inventory our transaction is closed, our account is closed here. So now if we add this amount here on the debit column, it is $8,400. Same we have here $8,400 on the credit column. Okay, then what happened? Then over the year business purchased some more goods. Okay, these are also inventory. Business purchase inventory for resale. Okay, so after reselling, again there is a balance of inventory on the question. Okay, so here we see at 30 September 2023, inventory is 8,675. Okay, so here the opening inventory we have taken to the income statement, so this is closed, finished. So why does this balance come again 8,675? Business purchase goods over the year, yeah, so all goods purchased are not yet sold. Okay, so there are some balances, so this balance will be the closing balance. Okay, so when we prepare the income statement, what we do for closing inventory, we subtract, right? So when we calculate cost of sales from all the totals, we subtract closing inventory, yeah. So after subtraction, what entries business make here? Inventory account to be debited and income statement account to be credited. Okay, the opposite of opening inventory. So here in inventory account to be debited, okay, it is a debit account, so we will come to the debit side. Okay, and we will write the corresponding account, which is income statement. So let us write here income statement. So here it is $8,675. Okay, and the date, it is the last day of the financial period, so we will write here 2023 September 30. Okay, so done. This is how you need to make entry in the inventory ledger account. Okay, this is not complicated. You don't understand where to record which amount, so you are messed up in the exam. I hope next time you can prepare this account correctly and you will obtain full scores.